Hello, in this presentation we will enter a sales receipt for a service item in QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitar problem. We're going to be entering a sales receipt for service items as opposed to inventory items. So for example, we won't be selling guitars, the inventory item, but having a sales receipt for a service item. It's important to note the difference between a sales receipt and an invoice. The invoice is what we're going to use when we do work and we expect to receive payment in the future. In essence, recording an IOU, an accounts receivable from the client. The sales receipt within QuickBooks is going to be the documentation used to record the sale at that point in time. So in this item, we're going to use the sales receipt. You can imagine we're in the guitar store here. Someone came into the guitar store and wants to have the service on their guitar for retuning or diagnose something on the guitar involving service, not selling a guitar. And we're going to do the service and get paid at that same point in time. And that would be the sales receipt. In order to enter the sales receipt, we're going to go up to this item up top, the little plus item. This is our quick window to get to most of the documents in a quick fashion. We're going to be in the customers section, and within the customers section, we want a sales receipt. So here is the sales receipt. I'm going to select that item, and we see a sales receipt, a lot similar to an invoice. Just remember the difference here is that when we see the form sales receipt, it means that we got money and either deposit it into the checking account, but typically we're going to put it into some other account, an account like undeposited funds, and then deposit it at a later time. And then the other side of it will be going to revenue. If we were selling inventory, we would also have a decrease in inventory and cost of goods sold. If we don't have inventory, such as a service item, as we're doing now, then we don't have to worry about that second piece. It's a more simplified process. So we're going to pick the customer first of all. So if we select the drop down, here is our list of customers. If we start typing in the customers, it will autofill. We're going to say we're on Sam, the guitar man. And this is a new customer, so Sam, the guitar man, is not there yet. So we're going to add Sam, and it didn't add. We're going to say Sam, the guitar man. Then we're going to tab through here, so we're going to say the email address. We don't have one at this point. If you have the email address, it's useful if you want to save and send by email. If you're just going to print it out and give it at that point in time or save it as a PDF, then the email is not as necessary. We're then going to tab through here and we get to the billing address. The billing address will be important if we have sales tax. Now in this case it's a service item, so we're not going to have any sales tax and therefore the billing address would not be as important. But just keep in mind as you work with this, if you're selling something that has sales tax, QuickBooks Online will do this automatically now. And in order to do that, it needs the address of the store. So when you set up the company, make sure to have your address in there. And it needs the billing address in order to calculate the sales tax, or at least where the sale is going to take place, and as well as setting up the agency or the location by agency as well, that the sales tax will be required. So I'm going to add an address here, even though we don't really need one for service items. It's not going to be as big a deal for the service items. We're then going to go over here and have the date as of 01/16/21. We will be working in the future here. Tabbing through the shipping, we don't have any shipping. The payment method we're going to say is cash. So we're going to say cash and the reference number, and then make sure this is undeposited funds. Undeposited funds. So it's going to go into undeposited funds when we get the payment, when we get the cash. That means we have it. You can think of it in the store, in the register. Then we're going to deposit it into the bank at the end of the day. Then we're going to have the product or service. These are still going to be items here. So just like inventory items, we've already listed the items out. We have input the items. If you want to see how to do that, take a look at the prior presentation. And if they're already in there, then we can just use those. If they're not, we could enter items here as we go as well. We can add the items in this screen, or we can add all items in a prior screen, and then they should be set up. It's great to have them set up because once they are set up, then anybody can run this system. They can basically, you can say, hey, run the register or run the QuickBooks system, record these, and it should be a simple data input process at that point. So we're going to have a diagnostic. So we're going to say the drop-down diagnostic. I'm not sure exactly what that is in terms of guitars, possibly a diagnostic on the amplifier or something, I don't know. But we have one of those that we sold, that we have a service item for that. And we have one, rate 68, and 68, no tax is going to be applicable because this is going to be a service item. And then the next item we're going to say is a guitar tune-up. Guitar full tune-up. Well, let's see the drop-down. We'll see the drop-down, see if we have the guitar. Actually, we labeled it our service. So there it is. And that's going to be the description, guitar tune-up. Now, where did this description be different than the our service? How did that happen? Because that's in the description when we set up the inventory item. It's just pulling that information in. So that's going to be quantity 1, rate 140. So there's the 140 there. Tapping through that, that's all we have. So these are going to be our 2 service items. We're imagining someone in the store getting a diagnostic and an hour service on their guitar equipment, and that's going to cost $208. There's no sales tax because this is a service item. If there were sales tax for any particular reason, we'd have to select that tax item here, let it calculate there, and that's going to give us the total then of the 208. So let's just recall what this form is going to do, and then we'll go see that it does what we think it's going to do. We know that it's a sales receipt. That means we got a payment. We didn't put it in the checking account, so we're going to put that in the undeposited fund. So an asset account, undeposited fund account will be increasing. The other side is going to be the fact that we earned the revenue through the service we did, diagnostic and hour service, and therefore the other side will be some type of revenue account on the income or profit and loss statement that will increase as well. So let's print this out, and then we're going to go and check out the financial statements. So we'll go to print or preview, and we will print or preview this documentation. Then we're going to download this information and save this to the place where we want to put it on our desktop. Date's going to be 01/16/21, and it's going to be a sales receipt for Sam the Guitar Man. Hopefully I spelled that okay. That's okay. We're going to save that. And it has been saved, and we can do whatever we need to do with that. And we're going to go ahead and close this now. I'm going to X out of it up top with the X. And let's go to our reports and see what happened to the reports from this document, from this sales receipt. We're going to go to reports, left-hand side, drop-down menu. We're then going to go to our balance sheet. We're going to type in the balance sheet, select the balance sheet. Change the dates to the dates we are in, 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. We'll run that report and see what happens. So we're going to scroll down. We got cash, remember, and we put it into these undeposited funds. So we have a lot of undeposited funds right now. We really need to go to the bank. But that represents funds that we have not yet gone to the bank with. They're basically in the store. So we're going to click on that. And here is our items here. And there's the Sam the Guitar Man payment or sales receipt item. If we click on that, we will see the sales receipt, hopefully, that we have just input. There it is. So there's the one side of the transaction we just did. We're going to close that out. We're going to see the other half, the other side of the transaction we just did. Scrolling back up, we're going to see the back to report. We're going to go back to the report. And the other side should be revenue. So that's going to be not on the balance sheet, but on the income statement. So let's go to reports on the left-hand side, selecting reports. Going to type in the income statement, or profit and loss as it's often called or is called on QuickBooks. There's the income statement. We'll change the range from 01/01/21 to 01/31/21, and we will run that report. So we're running the report for January 1st, 2021, the year we're working in, to January 31st, 2021, the year we are working in. We have a revenue account. Note we have two revenue accounts here. This is going to be the inventory we sell, which QuickBooks is calling sales of product income. And this is going to be for the service items, the items that don't have inventory related to the revenue we make. We, of course, will be choosing this second one, the 208. We'll see the items here, and we have the 140. We're going to select the 140. And here is the data that we have just entered for that information for the 208. So we've got the two items here. So if we close this back out, note that this is one sales receipt with two items in it. If we close this back out, we see the detail is actually breaking it out by item. So it's the same sales receipt number 1007 with these two items in the detail for this transaction report. This is kind of like the general ledger, by the way, showing the detail of the account, the history of the account. We're going to go back to the profit and loss. Now, if this was something like inventory we sold, then we would also have cost of goods sold here. No cost of goods sold this time because we did service, not inventory. Therefore, that 208 is the increase we have, the only increase we have that will increase net income.